Welcome to this weekend's silver chart analysis as well as the dollar index chart analysis. It is Saturday, the 17th of August, 2013. My name is Derek. So let's get on with this analysis, starting with an older chart from July the 12th. And it was an interesting pattern that was extremely noteworthy, and that it was making an unusual pattern of higher highs. There's 1, 2, and 3, and lower lows. Well, since and at this point here, it had sold off significantly, stating, okay, something big is about to happen. Because oftentimes, from failed moves, create fast moves in the opposite direction. Therefore, it seemed 100% that a failed move was going to occur because I can see it right now. Either the failed move was breaking down below here, or the failed move was breaking out above here. So if this was the failed move and then it breaks above this high, resumption of the bull market, and if this is the failed breakdown and it then has a solid breakdown below this low, then the possibility of the end of the bull market and the start of a possible new bear market. So let's update this now. Let's take a look at this chart. Where we look for today, let's throw the all the different lines that I put on these charts in it, and we will do that now. There we go. So there we see there's the higher high, there's the lower low, and there's the higher high again. What I like about Fibonacci retracement analysis is you can get signs stating where moves are looking good. Maybe moves are looking really, really bad. That's what we got here. You got this bottom at $80.51, or 80.51, we'll say. We got this high of 84.97, so 80.5 to 85. The significant Fibonacci line is right here, which is 82.19. Holding and staying below there for a significant period of time tells me that the previous move here to here is a failure. So now I am looking at this, I am told that we're looking at a failure. Thus, it looks as if a test of 80.5 is certainly extreme probabilities. Let's look at it even a little bit further, though. Let's take a look at this chart here that I originally put up on June the 7th of this year, which shows significant highs and lows. Tops and bottoms are known after the fact. You can do the best you can to try to guess them at different times, but really that's the best you are going to do. Okay, therefore, what has happened with the chart since this point is it went down just a little bit more, not much. Then it went up to this 84.97 handle, and now, of course, back down to here. So again, it's looking as if this move to this move is going to fail. Again, if this thing worked out on a bullish level, you'd have resumption of this bull market and maybe test the mid to high late 88 level. That's, of course, if the bull market resumes. For this to turn into a bear market, what I really need to see, and I would have said this on the 7th of June, is a clear break above this significant support. If the price action goes significantly below 78, then it would be in that of a bear market. Whatever the high is, you could post and say that was the high. As of now, the 9th day of July at 84.97 is the high. To me, you can say that's official if it breaks down below 78. And then wherever the next low is what the next low is. But what's significant to note that if it is a bullish case for the dollar index and it goes higher, you can expect the major wave of silver and gold to go lower. And of course, if it does manage to break below this level, even get to it, but that would mean bull market territory, and that is the dollar index analysis. Let's go to silver, daily chart. 8 consecutive up days in a row. That is by no means a record as far as movements over this period of time frame. It's doing well. It's done much better before in the past, but it has had great gains, and it is overextended. The price of silver is no longer oversold, at least not at this point. What we can see now is that where's key resistance? Well, originally when you're breaking out, you'd be like, okay, this is where I want to go now. But it's had such a great large rise breaking resistance that what's going to be important with this chart is this 18 average band, which is a front-weighted average of the last 18 periods, the average of the highs, the closes, and the lows. For if you get a successful area where it holds this 18 average, this thing keeps coming up, say, comes in here, and then breaks established resistance, bull market is in full force. That's one of the key things that I'd be looking for. Now, going back from this outside day, which has really started this, we're going to take a look at this on a 3-hour chart, pretty much month-to-date chart. This is where the outside day occurred. Immediately after that, it kept selling off, barely breaking below the low. And obviously, it's been up to the races non-stop ever since. Each correction has been either small price or small time. There's a small time correction, small price, small price, small price and time, small time, and another small time correction as well. So there hasn't been any significant corrections. There will be, but then you guess the when. Or when you say when, you can even say at what level. Is it going to be now? Is it going to be 24, 25, 26? I got to think that there's a better chance that we see 22 or a $1.20 sell-off before we see 24.5 or 24.40 or a $1.20 gain. But that's just a guess, maybe educated / calculated. I have no idea when this is going to top. As far as the next time frame, this is the weekly chart, up 13.15%, 13.17%, well above this 18 average, which is now the area you'd want to see it basically be key support. Now look at the situation back in here. You have this declining 18 average and you have a significant break above. So when I talk about, well, how is it going to handle having support? Well, here's where the support was. It has to get above established resistance, which was in here. Didn't do that. Instead, what it did do was it made a lower high, broke below this level, resisted it, broke below support, and then down the market went. So those are the key things to look at, which is going to be important for the daily time frame that I talk about, because in the daily time frame, if it does something like that again, you'd be looking at making new lows again. But for now, the odds would be probably favored to be more bullish than they would be more bearish as we head to the end of the year into 2014. It's at a key area as well as far as resistance is concerned. The high, 35.19. The low, 18.21. Getting above this nullifies the bear market. For if you're below here, you're bearish. Above here, you're bullish. In here, you're neutral. So now it's got a possibility of advancing this towards a neutral phase, because you were bearish here, you were bearish here, you were bearish here, and you even the end of the week with a bearish look, but the bearishness has pretty much moved to sideways. This 18 average moving, this 18 band is pretty much going to go sideways, pending, of course, major gains. Now, the best weeks silver has ever had, it's gained over 50% in a week before. The 10th best week silver has ever had for percentage gains in a week is at about 17.5%. There has not been a gain higher than that since 1998. So I've been talking about it before in the past. I'm waiting for a week so large that it is a top 10 worthy. This week was not one of them. The quarterly chart. Here what we have is the bull market, of course, that, well, if you look at this 18 average situation in here, you can see it was obviously declining in here. Back in the day, you got above it, but you didn't find support and then break resistance. Rather, it continued going neutral, had this failed breakdown, which is common to have on these markets, almost any kind of market. So this resistance was established. You got above it, back down to support, which was a newly rising 18 average. And then on this break of resistance would have been telling you, okay, this thing is ready to go again because you've broken past a key resistance level. We obviously got uptrend, and the result was breaking the area of about 9, going up to 21, a gain of almost double. You had this shakeout here. Question is this a shakeout in here? Maybe. But what we do know is before, when it broke past this significant resistance level, it had another decent gain, doubling again, which I guess would be saying the same thing again, breaking past this resistance level, same thing. Final chart, which is the indicator that I've been making, which takes a look at multiple moving averages from extremely short to fairly long term. A lot of different moving averages, then doing some calculations on regression or deregression, and I get these numbers. And I was stating in the last video about this that really getting above this significant level would be really, really important. And obviously that is what has taken place. It is now the second straight day in a row that it is now back above positive territory. So this is the first time since January it has been positive. This is the highest level it's been in about 10 months, going back to the top of 2011, or excuse me, 12. So we can see this is now in an upward trend. What this means as far as buying and selling is concerned, when I look at this game, I was stating, okay, you buy at negative 0.8. You buy at negative 1.6. You buy at negative 2.4. Well, it never got to negative 2.4. So technically, you would not have bought here, which quite frankly would have been dumb. But now that you get above this zero, you sell, or at least if you play this game, at a positive 0.8, and you buy if it comes back down here. Because one of the things that I talk about was buying at 1775 way back when it was bottoming. Or 1750, I think. Either way. But it never did make it there, so now I have to adjust the message of the market for the next buying opportunity. So therefore, I will be looking for this to get to negative 0.8. If it gets above 0.8 positive, I'll be looking for it to go below the 0.0 level. Just because it's overbought now doesn't mean it's going to go lower. For if that's the case, if it's oversold here, it did not go higher. But it is showing signs that the bull market or bear market for silver just may be over, thus a start of a new bull market. Thank you for watching, and have yourself a great weekend and great week. Bye-bye.